Part of our mission statement is for our clients to completely understand where they are from a financial standpoint, whether it's business or whether it's an individual tax return.
Teach me something, Uncle Money.
Welcome to another episode of Practice Prosperity. We have a guest today. She's an accountant, and she's going to give us a wealth of knowledge on how business owners can kind of prepare their books, things that they should be thinking about, really being on the proactive versus reactive side. And when you have time with an accountant, you know, you have to treasure it because they're very busy folks. So we are glad to hear. Welcome today, Jade.
Hey, how are you guys? Glad to be here.
Before we get into that, can you please explain, your firm and the type of clients that you service?
Yeah. So I am Jadon Johnson, CEO of LUXE Financial Consultancy. We are a boutique firm that we have two main arms, so to speak. So we service clients from a CFO standpoint, which encompasses bookkeeping, accounting analysis, as well as financial planning. Our second arm is tax. So that involves tax preparations to individuals and business owners, trusts, estates, nonprofits, et cetera. And then also some tax planning that goes along with that as well. Our typical clients are 6 to 7 figure earners. They are also clients who they want a comprehensive approach for their business. So they want to come to us. We're their one-stop shop from setting up their business from a formation standpoint, if that's what they need. And then also now we're doing the bookkeeping. Now we're looking at the numbers, telling the story. And then also if they are, maybe they want to open a brick and mortar, maybe they want to hire, maybe they want to put themselves on payroll. Maybe they want to have another service offering to generate more revenue, whatever the case may be, we are their one-stop shop. And then ultimately being in the best position that you can be during tax season.
I like it a lot. So any business owner, if you've been in business for a long time, there's a big time shortage in tax preparers and accountants in general. So what was your journey to become a tax preparer? Because we need to know this as business owners. Where can we find you? Because we need you all.
So funny story. I actually... accounting was not on my radar initially, right? So in undergrad, I was a biology major, minoring in chemistry with hopes of becoming a pharmacist. I took microbiology, organic chemistry, same semester, big mistake, changed my whole plan, right? So I changed my major a few times, and I remember getting a call from my dad, like, you are not going to be a forever student. You need to get a major and stick to it. At the time, I was in accounting. So I went down to take a career placement exam, and my highest numbers were in dealing with people and numbers. So I was like, okay, how can I marry the two, right? So at that time in 2008, I was like, you know what? I'm going to open an accounting firm, not knowing what it looked like, how it would come to pass, any of that. So after graduation, I went and got my master's, started working in corporate America, currently still in corporate America, about 15 years now. But in COVID, I birthed my first baby, which is LUXE. Prior to that, I had done a lot of freelance work, worked at some tax firms, doing taxes, consulting for business owners. And I finally decided, like, hey, I'm going to do this. I'm going to open my own firm. From there, we had an overwhelming response. I think after 6 months, I had to stop accepting clients in order for me to scale, which we'll kind of talk about later, scale the business and be able to bring on new businesses. So where to find me? God willing, we are not going anywhere. We have a website that I'm sure we'll add at the end of this call and all of my information. So that's how LUXE came to pass.
Before you launched your business, speak on like the emotions that were happening. Like, what were you thinking? Were you scared? Were you excited? Like, what gave you the confidence to actually make that leap?
Yeah, I was definitely nervous because you have all the emotions of what if I'm not good enough? What if I don't have the right answers? What if a client asks me something and I'm like, I have no idea what you're talking about, or and then just kind of looking at the market as well and what your competition is, right? Just pairing yourself up against them. So I think for me, it was a matter of, Jadon, you've been doing this for a very long time. You have a degree in accounting. You have a master's in business, with an emphasis in international business. You studied abroad, so you understand how to run a business. But not only do you understand how to run a business, you understand how to look at the numbers and let the numbers tell a story to help business owners grow and get to the next level. I think for me, it was also working in corporate America, which is I work for a big Fortune 500 company, but taking those principles and those strategies and applying it to my clients. I always tell them, just because you're a small business, you don't have to think like a small business, right? I also think that I had done taxes for so long. In undergrad, I would do it as an intern, and then I worked for a few companies, and then I would also volunteer and do taxes under the VITA tax program. So taxes was never an issue for me. It was more so on the accounting side. Another thing I also recommend is I'm a proponent of, I'm not the first to do this, right? With the age that we live in, with social media, you have access to a lot of different people, right? And so I knew that if I wanted to be offer a LUXE accounting firm, right? I needed to find people in my industry that were doing the things that I wanted to do. So I actually got a business coach. And that business coach helped me scale my business. She helped me walk through my sales process, my structure my services based on value instead of just a price. She helped me hire. She helped me overall just scale the business. And I think that gave me a lot of confidence as well. So yeah, I think all the things wrapped up in one. Like, I think I had been preparing for this moment ever since 2008 when I said I wanted to own an accounting firm. I think that those 13 years I had been preparing myself and not knowing it for that moment.
So, there's two options every entrepreneur can go down. It is to go cold turkey and jump into the business. And it's the other second option is to, do two things, do maybe a corporate job and also do the business separate. Explain your decision and the pros and cons of both approaches from your perspective.
From working 9 to 5 and operating and running a business
versus going 100% in without a safety net. What was your process on that? Because that's a deliberate choice.
Yes. So I think it depends on where you are in life, personally. So for me, when I started my firm, I was 36, 35, I can't remember, late 30s. Okay. When I started my firm. And so and I had already been working full time, like I said, at that time, probably 11, 12 years. What I did was I was using my 9 to 5 income to support my business. At that time, I was investing into my business in order to keep the business up and running. And then I also was using that money for my living expenses, right? To pay my mortgage, all of my bills, etc. So I wasn't solely dependent upon my business. The beauty in that is, well, let me back up. The beauty in owning your own business is because you get to work with who you want to work with. You get to be off when you want to be off. You can take vacations. You can work from anywhere. You don't have to answer to anybody, right? And so if you're working a 9 to 5 and also a business owner, you have the opportunity to make that more of a reality because you're not hurting for business. Mm-hmm. And so I was able to build my book of business based on the type of clients that were ideal for me instead of just accepting any business, right? So I think that's the pro. of it. Now the con of it is you work a lot of hours. I was of the mindset where I was not going to give 8, 9, 10 hours to my business every day. I mean, to my 9 to 5 every day, and not give that same amount of time and energy to my business. So I worked a whole lot. But if you are in a situation where you are able to go all into your business, where you don't maybe have responsibilities, you can cut back on some of your expenses, you have a nest egg put away, and you can go all in, definitely that would be the way to go.
Mm-hmm.
The negative in that is, I mean, the business has to do well, right? You don't have any other option. You don't have a fallback plan, any of that. However, for those who are working a 9 to 5 and want to transition to becoming a full-time entrepreneur, I would say there are a few things that you should do. Number one, you want to make sure you have 6 to 12 months of savings on a personal side to cover your expenses. You want to have about 6 months set aside to cover on a business side to cover your business expenses. And then you want to think about when you make that transition, what are you going to do about health insurance, right? What are you going to roll? If you have a 401k, are you going to roll that over to a Roth or another traditional IRA account? What does that look like, right? And then also the mindset of switching from a 9 to 5 to a full-time business owner. You have to understand that there's ebbs and flows. You have to understand that you're not on a bi-weekly, well, you can be, but you might not necessarily be on a bi-weekly paycheck or once a month, same amount that you can just move and shake how you want to. So there's pros and cons to each. I think it just really depends on what stage of life you're in.
Yeah, it's definitely different being an entrepreneur. Like right now, we're doing this recording a day after a holiday, which most people use off. This is part of the process that we have to go through. The next couple of questions are going to be definitions. So as business owners, we may be good at that thing that we do, but we're not that good at accounting. We don't really understand. And sometimes when an accountant approaches us or we think about what's our problem, it's kind of hard for us to solve. So let's go through some terminology as it states in your business if a prospect was coming to you. The first thing we hear about is bookkeeping. So what is bookkeeping? I mean, nobody actually keeps a book. Nobody is writing down their things or even, usually not even keeping a receipt book. So when somebody says, I need a bookkeeper, what are they really saying?
Yep. So if you're looking for just a bookkeeper, it is strictly transactional. Mm-hmm. All they are doing is taking the transactions in your bank accounts, whether that's a checking account, savings account, credit card account, and they are categorizing it to an asset, a liability, owner's equity, revenue, expense, etc. And then from there, you have financial statements, balance sheet, income statement, and cash flow. Mm-hmm. So a bookkeeper is strictly transactional. They are just categorizing your transactions where they need to go.
And there's something with bookkeeping I've talked to accountants about. It's something called, and this is actually a little bit of a corporate term, a chart of accounts. Mm-hmm. How do you think about that? For a small business owner, do you just chart the account to what the tax categorization is, or do you chart the account to something, more functional towards the business? How do you think about categorizing different expense types? And let's say for small business owners.
Yep. So both, actually. So there's timing differences between the tax financial statement, which is a Schedule C, and the financial statements of just like the income statement, balance sheet, things like that. Schedule C is just an income statement, right? But there are some differences timing wise, like depreciation, things like that. So what we do is we take the Schedule C, we start with our chart of accounts there. And then depending upon your business, we tweak those chart of accounts to your specific industry. So for instance, if you have, so on the Schedule C, it may say for revenue, it may say, depending on if it's a product or a service-based business, it may have one bucket for revenue, right? Then it may have cost of goods sold if you have a product. However, over here, if I have a service-based industry, I may have that broken out. I may have it like at Lux, it may say bookkeeping, it may say tax, it may say business formation, etc., right? But all of that is tied together and goes to the Schedule C. So the difference in the chart of accounts is the everyday chart of accounts that we use are very detailed, so that we can look at the numbers. But on the tax side, it's kind of grouped together in big buckets.
I think that's important in that grouping together. But I think that leads to kind of another service that you provide, which is like account analysis. So my background is kind of FP&A, and the value of analysis is immense. So kind of explain from an accounting standpoint, like what type of analysis are you doing? What are some of the value adds you have seen from working with clients providing that analysis?
Mm-hmm. So we talked about bookkeeping. So now the next level is the accounting analyst, right? So these people are usually more skilled. They usually have an accounting degree. And so what they are doing is taking those numbers that the bookkeeper has now categorized, and they are telling a story. So they are saying, okay, revenue month over month, quarter over quarter, year over year. What are the key performance indicators that is driving revenue? If the expenses have went up or down, what are the key performance indicators that are driving that business? Now we're also looking at cash flows. We want to make sure that, more specifically, the operating cash flows, right? We want to make sure that we have enough revenue coming in that we are able to cover our expenses. The accounting analyst is going to be able to do that. So it's okay. I mean, yes, you want to have your books in order, but you also want to know what your business is doing. And so that's what the accounting analyst is going to do.
I think you said something interesting. You said key performance indicators. And I think, we in the finance world hear those words all the time, but for usually business owners, that may be their first time hearing that. Explain what key performance indicators are and how you've leveraged that to help your clients.
So key performance indicators are basically the drivers behind the numbers. Mm. So if we are looking at revenue, what are the drivers behind that revenue? And so that could look like, I got a great example. Mm-hmm. So I have one client who does a lot of discounts, right? Discounts on the financial statements, they are up under revenue, right? And so if we're looking at her revenue month over month, year over year, we are actually, those discounts are a key performance indicator, because it could be making or breaking her business in the amount of revenue she could be generating versus what she's actually giving discounts for. So it's really just the drivers behind that that financial statement item that we're looking at.
I think it's important to note, and they could be either financial numbers or metrics, or they can be non-financials. And
yes,
skillful count analysis can bring those two together. And I think that's just so valuable for any business owner to have in their back pocket an accountant that can do such things. Yeah. Now, we talked about bookkeeping, account analysis. Now we're taking it another step further. And this is called financial planning. And we're not talking about a financial planner as I am. We're doing a different type of financial planning. Can you elaborate what you mean by financial planning for business owners?
Yep. So that's part of our CFO. So we call him CFO. So CFO is just all encompassing, right? So now that we have the bookkeeping, we have good numbers. Mm-hmm. Now we have the accounting analysis. We know what's going on in the business. Mm-hmm. Now we want to take those numbers and project them forward, right? So whether that's 1 year, whether that's 5 years, whether that's, we haven't even done really 10 years, but I would say like a year and 5 year plans, right? And so what we do is we take, we got to create a budget, right? And so we take historical data, so maybe like the year prior, put it into a spreadsheet. We look at, when big expenses may come out, because we always encourage our clients to do, if they have any subscriptions, do it for the year. We save money. So we want to see, okay, when are those big items hitting? And you may say, hey, Jadon, I want to hire a chief operating, a COO, chief operating officer. Yes. I may want to hire a COO, and I also may want to hire like a personal assistant. Okay. So what does that look like? Based on historical data, this is what we can afford to pay them. And then we're going to do a little bit of market research as well to see, okay, what in this area, how much are personal assistants going for? How much are COOs going for? Would it be better to contract out a COO instead of bringing them in-house, right? Making them a contractor instead of an employee. We also may look at things like if they want to open a brick and mortar, or if they want to go like to an Amazon storefront. What does that look like in the next year? Or how do we get there for that to happen in the next year, next 5 years? So financial planning kind of lives in the future. Mm-hmm. Accounting analysts and bookkeepers kind of live in the past, at least 1 month in the past. So that's the difference.
What do you say to a business owner that I've never projected out and I've been doing well? What are they missing out on by not taking the time to say, what do I expect coming in the future? How should I think about investments? What are those missed opportunities that a business owner who is successful but just hasn't done that level of projections?
It's almost like, I'm trying to think of a real life example. By not planning, I mean, you're really just moving through life, right? So there are some missed opportunities from a tax standpoint, because there may be some tax deductions that you can take advantage of, but you're not actually utilizing them because you haven't done any planning. I tell clients all the time, if you come to me in April or January through April to try to file your taxes, the year is done. There's really not much that I can do. However, if we would have took some time to plan throughout the year, made some investments, maybe purchase some assets, maybe whatever it may be, then we could be in the best financial position during tax season, right? So there may be some tax missed opportunities. There are also managing cash flow when you're doing these things is so critical, right? And so if you are taking out a loan, if you are having investors, they're going to want to also see financial statements. They're going to want to see what's their return on the investment. They're going to want to see what your financial plan is, right? And so if you are a business that is wanting to grow and take your business to the next level, you have to do some type of financial planning in order to, like I said, get investors, take it to the bank, get loans, lines of credit, whatever it may be. There could be some missed opportunities by setting yourself up to be in the best situation that you can be in.
Yeah. And I love that, because when you project forward, you can also do things like sensitivity analysis, like what causes your business model to break. And if you know those risks, you can leverage or mitigate or be aware of what's happening. So you're not just looking at yourself in a cash crunch, laying employees off or missing opportunities, which I think is the usual thing. So I think that's important. Now, you mentioned something that every business owner kind of shudders, and we're about to go into that season. It's tax season. Planning for taxes, thinking about taxes. What differentiates your tax services versus an accountant?
So I think, I know what differentiates us. We are a comprehensive firm, right? And so what that looks like is once you're onboarded to LUXE Financial Consultancy, you are assigned your very own bookkeeper. You are assigned your very own accounting analyst, and you are assigned me as your CFO, which you have access to 24/7 in our client portal, right? The transition to taxes is very simple because you have pretty much everything you need, right? We use a separate portal where clients are able to upload all of their documents, and get their taxes done. If you are somebody who is not a CFO client and you are coming, you've heard about us, word of mouth, referral, whatever the case may be, you are onboarded into our client portal, which is TaxDome. So in TaxDome, you are assigned an organizer. And that organizer is going to walk you step by step of everything that we need to complete your taxes. You can save that organizer, come back when you're ready to complete it. And then once it's done, our team is notified. We have a 3 to 5 business day turnaround. And we are sending you back your tax return or questions that we have to, if we found an area where we feel like you can get more of a deduction, we may ask for some supporting documentation. After that, you receive your return. We will actually walk through your return with you line by line so that you understand. Part of our vision, part of our mission statement is for our clients to completely understand where they are from a financial standpoint, whether it's business or whether it's an individual tax return. And so we walk through it with you line by line. Once our hearts and minds are clear, we sign it, or the client signs it, we file the taxes, and then we send you, the links of how to check your return, or if you have to, if you have a liability, if you have to make payments, you'll receive that information. So I think for us, we are very communicative up front and throughout the entire process. If you have questions, you can reach out to us in the portal at any time, and somebody, either me or somebody from the team, will reply. So you're never in limbo about what's going on. And so, yeah, I think that's a part.
This is a little, I guess, could be therapy for me. How are you able to make sure that your clients send you all the necessary documents? Like, what is the secret sauce? Because I have to deal with that in my business, of getting clients to give you the pieces of information necessary for you to do your job.
The organizer. So every year, and I'm actually doing that currently as we speak. So the team, every year, so we have a few organizers, right? We have an organizer if it's just an individual person tax return. We have a S Corp organizer, a nonprofit organizer, trust and estate organizer. So when you log into the portal, it asks you what type of return do you need to file, and whatever you select, that's the organizer that will be uploaded. And so every year I go through those organizers based on things from the prior year that maybe I felt like I kept having to ask for. I'll make sure it gets included in the new organizer. So I actually walk through the organizer as from each of those categories as if I was that person, and put in questions, put in documents that I know I would need. On the flip side, I get feedback from the team, right? So if they're the ones that are all up in the details. And so I'm like, hey, what was something that was recurring that you felt like you constantly had to ask for, or because maybe the organizer didn't have it as a requirement, right? It may have had it in there, but maybe it wasn't a requirement. If it's a requirement, you can't even move forward, or you can't submit it until that document has been uploaded. So really it's the organizer. It helps me, it helps LUXE, the accounting firm, and it also helps the client, so that, we're not having to go back and forth a million times. And then once it's in TaxDome, it stays there. And so if you're a returning client the next year, it'll recognize that, and it would only ask new questions. And then if anything changes, you can update it as well. But so yeah, it's the organizer.
And that's awesome. Now, one thing I've never heard, this is pretty cool, an accountant going line by line on the tax return to make sure that the client or the business owner really understand what's going on. What prompted that business practice, and what have you seen because you're doing those things?
So I say we do that. We do charge an additional fee for it. because we are hopping on a call, going line by line. We're going line by line of the 1040. And then I explain, where it's coming from and the supporting documentation behind it. What prompted that was I had a lot of clients, when we have our discovery call before, they either didn't understand what the 1040 was. They didn't know if they had a tax liability or not the prior year. They didn't understand like itemized versus standard deduction. So in conversations, when I realized that was an issue, I decided, I have to figure out a way to like kind of mitigate that, right? So that's where going line by line came from. It has helped. I mean, I think the ones that have done it, every single person gets off the call like, man, I never knew this. Right. I never even looked at this document, right? Let alone, and we go through the basics. It's not even like, because the 1040 is not that hard, really. But if you don't know what you're looking at or know how to read it, just having somebody break it down to where it's digestible, I think helps tremendously. And it helps with client retention as well, because people are coming back, and they are already in their mind. I forgot to mention. So at the end, we do send you a few things to change the next year, right? And so I'll have clients sending us messages in text even throughout the year. Hey, I'm thinking about doing da, 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 and I know that, maybe I had somebody just the other day, they were like, donations, right? Donations is an itemized, it's an itemization, yes. And so they were, trying to see, okay, if I donate this much, will I be able to deduct the entire amount? Or the same client, when they did donations, they didn't receive like a form. And so they were like, I think I'm gonna give to the Salvation Army this time, because at least I know I'll get a form that I can use for tax purposes. So I think just educating people is, again, part of our mission. And so it just became like routine part of the process. So,
as any business owner, they say, don't commingle your funds. Keep it separate business and separate personal. But when stuff hits the fan, stuff needs to be moved around. One, what is the negatives about commingling funds? And then two, what are some strategies you have seen work with the people that you work with to making sure you keep those two separate, your business expenses and revenue versus your personal expenses and revenue?
Yeah, so let me just caveat by saying, it's inherently illegal to commingle funds, right? So when I say that, as a business owner, right, when you establish yourself as a separate legal entity, whether you're an LLC, partnership, whatever the case may be, right, you're doing that to protect yourself, the owner, from all of the losses or liabilities of the business, right? So you're protecting yourself. However, if you open a business bank account and you have personal items running through the business bank account and business items running through the bank account, you've now negated that LLC that protects you. Because now we don't know if somebody is coming to sue your business, and we look at the financials, we don't know what is personal, what is business. So they're coming after everything. The courts do have, they can do what they call pierce the corporate veil and make the owner liable for all of the business debts, liabilities, things of that nature when you are commingling funds. So if you, and the way to do it is to transfer money, right? So if you are an LLC and you are taxed as a sole proprietorship, not an S corp or partnership or anything like that, if you're just an LLC, you can pay yourself owner's distributions. So what I always say is we go through this exercise at LUXE where you fill out this Excel spreadsheet. you pretty much put in everything that you need to live for the month, right? And I'm talking about savings, tithes, offerings, mortgage, hair, nails, or well, if you're a guy, maybe you want to extracurricular golfing. Put all of that in a spreadsheet and say, this is how much I need to live each month. So then I say, okay, do you want to be paid weekly, bi-weekly, or annually? Or not annually, monthly. Once you establish that, just do a Zelle to yourself, same amount every month, or however, whatever the frequency is. And that way you can use those funds to pay for your own personal financial things that you need to live. If you want to invest in your business because the business may have a huge expense and you don't have the money to cover it, then Zelle money back over as an investment into your business. Commingling is when you are swiping your business card for personal items. If you went to Zara and you had $200 in clothes and you swiping your business card, that is commingling funds. That Zara purchase should be coming out of what you're paying yourself.
Like that. So let's speak to the person who wants to start a business or has started their business, but they're still in their 9-to-5 job. You touched on this a little bit. Like, what are the steps, the boring, the nitty-gritty steps of preparing to go out on your own full time? What do you recommend people have in place so that it's never going to be a smooth ride, but to limit the bumps along the way?
Yeah. So I always say mindset. You got to change your mindset because you will be tested. It is not going to be the same as having, if you're a budget person, right? And you say, hey, I make $100,000 a year. This is what I have coming in a month. These are my expenses, and I can go on about my merry way. That's not necessarily the case, at least in the first few years of owning a business, right? So shifting your mindset. Second thing is, have a plan. And so in that plan, you need to make sure that you have 6 to 12 months of personal savings to cover your personal expenses, right? Because you don't want it while you're trying to build this business over here, you don't want to be trying to pay your personal stuff and your business. So have 6 to 12 months of personal savings. Mm-hmm. Then have 6 months of a business savings to cover any expenses, especially if you start to scale the business. 6 months worth of scaling. Also, don't forget, if that business has a 401k plan, if they have pension, you want to make sure that you are calling other financial institutions to see how you can transfer that money over so that you're not penalized from a tax standpoint. And then lastly, if you have health insurance, whether it's Blue Cross Blue Shield, United Healthcare, whoever it may be, I would reach out to them to see, if you're transitioning to a full-time business owner, number one, do they offer plans for full-time business owners? Being that you are already, the good thing is they already have you, right? And so you're saying, hey, or they have your company, but they have all of your information. Asking them if they offer healthcare plans to business owners and what would be the transition to a full-time business owner. So yeah, I think those two, no, not those two. You have those few things in place, you'll be in a good situation to leave your 9-to-5 and go full-time. We call it an exit strategy.
I like that. I think few people realize how much 6 to 12 months of living expenses can add up to. And the sacrifice, if you say you want to go into business, these are the sacrifices you have to make, which is maybe dialing back a couple years beforehand to manifest what you want. So I think that's important. Now, let's say somebody made the leap. They're out there, they're making a good income, for themselves, but they want to take it to the next level. They actually want to scale. What is some thoughts that you have about scaling? You've seen a lot of business owners. You watch how they manage their books. You've gone through the process yourself. What does scale mean to you, and how can you help business owner take it to the next level?
Yeah. So another, it's not a service offering, but naturally we do this at LUXE, right? So scaling for us is people, processes, procedures. And so from a people standpoint, you want to make sure that you are hiring qualified people, not just help, but you want to hire qualified people. So for us, and as an accounting firm, we want to make sure you have an accounting degree. You either have a CPA, a EA, some type of, or just a master's, right? But you have the skill set and the expertise to work at our firm, right? You also want to invest in your people. Send them to training, encourage them, maybe if you don't have a certification, you are working towards one. How can we support you in doing so? And then do quarterly, monthly check-ins, right, with your team to make sure that they are still on board with your vision, and that they don't have any quirks, or encourage them to just not encourage them. Lord, is not what I'm trying to say. Make sure that everything is okay. Offer incentives, bonuses, things to keep them around and keep them motivated to work for you, right? The second thing is procedures. So I always encourage my clients, and I did this as well. Before I was going to hire somebody, I started writing down all of the things that I did, right? So when I was doing the bookkeeping, right, logging into QuickBooks, pulling up this account, this client, going to transactions and categorizing the transactions. When I was onboarding a client, what was I doing? I was creating their chart of accounts. I was making sure I got their certificates of organization, their EIN documents, their logos, like just creating a checklist, task list ahead of time, so that when you hire those people, they have procedures to follow. You don't want to, I always say, you don't want to bring people into your mess. Like, have it structured so that when they come in, they can be successful, right? And then they can just try to find some efficiencies along the way. The third thing, processes was the third thing. So now we're getting into systems and processes, right? So finding a CRM system for your industry, that maybe you need a client-facing CRM system, maybe you need a company just for like your employees, CRM system, whatever it may be. Doing some research to find out which one works best for you. Also, if there's some type of email marketing that you can use, or Instagram is also a good marketing. So, or if you want to invest in an SEO, whatever systems that you can put in place to help scale your business. Every single thing that you do when you're scaling is probably going to create an expense. We want to make sure that that expense is going to allow you to generate more revenue. So again, we're bringing on systems that are going to help us be more efficient, get the job done faster, et cetera. We're bringing on people. That's going to be an expense, but we want to make sure that we're bringing on more people, we can take on more clients. So that's my spiel on scaling.
So let's geek out on this. So me and you have a background in internal audit. So we kind of preach to ourselves, document policies and procedures. And I believe anybody who wants to call themselves a business person needs to spend at least 6 months in internal audit, because it'll change the way you think about business and checks and balances. And when I tell people, hey, document what you do, they look at me like I have 5 heads.
Yeah.
Elaborate a little bit more on why people should document what they do. Like, what does that do? It's yes, it's something you can pass to employees, but it's also like you are creating best practices, some things that I didn't know I did that. Why did I do that? Like, kind of speak to that aspect of it all.
Yeah, that is a good point. That I think that probably comes from that internal audit hat. But you're right. So best practices, but as well as risk management perspective, right? You want to make sure that if somebody was to hit the lottery, right, for example, and they walked away tomorrow, who's going to be able to pick up that same job? I mean, pick up and be able to go where that person has left off. They don't have to know it fully, but at least having procedures that they can walk through so that it doesn't stop the flow of your business. That is so important. And maybe it's not, hitting a lottery. It could be, something traumatic happens in that person's life and they have to step away. And you, the business owner, you want to be able to make sure that you have some plan that somebody else can pick it up, or if you have to get in there and pick it up and do the job. So not just for scaling purposes, but also just from a risk management perspective.
Yeah, and I think for me, I make money using my hands, typing, emailing, all those things. If somehow I lose my hands, I don't want to be in a situation where I lost my business. Maybe I can coach somebody on what I do, all the brand and equity that I built up. So it's a continuity thing, I believe.
Yep.
So you look at the books of not only, your W-2 work, you look at the books for, a lot of the accounting stuff. Like, what are some things that business owners are missing when they think about their finances? Like, what are they just not thinking about that could make a big difference for them?
Prior to coming to Lux?
Either way.
So that's interesting. So I'm very big on, if I've experienced something, that I have to find a way to include it in my business so that it doesn't keep happening, right? So part of our discovery call, I go through questions about your current state of financials, right? I'm asking, what was your gross revenue? What was your net revenue for the prior year? What was your tax liability for the prior year? What was, where do you see your business in the next 12 months? I ask those kind of questions on purpose, right? And I'm doing that because I'm trying to see, do you know your numbers? Do you know your business, right? Because at Lux, again, our mission is to educate our clients. And 100% of the time, they do not know the answers. And so I never want my clients to be, in conversation. As a business owner, you are always on, right? You're always selling yourself. You never know who you may run in contact with. So your elevator speech for your business has to be on at all times, right? And so I never want my clients to be in a situation where they can't speak to how their business is performing from a financial standpoint. So I think the key things to know when you are talking about your business is gross revenue, net revenue, and then kind of what your financial plan is for the next 1 year. Like I said, 1 year, 5 years. It's just very important to know in general conversation with people. And so I think by not knowing that, it does show a level of like where you are in your business. Maybe you're, premature in your business if you don't know those numbers. So yeah, if you are at Lux, you will never not know that information because you get a financial package every single month and a video from me. So there's no way you don't know unless you just did not open your portal. that month.
I agree. I think once you have different conversations with different people, I mean, it's not uncommon for me to be on the golf course and discussing those type of numbers, margin, all those different things in the business, because not only do they want to know where your head's at, your capability, but you're supposed to be able to teach them something from your books and how you manage them to different people, because then you become actually a valuable asset, a resource to community. So what is next for you? So you've brought on people to help you with the accounting. Where do you see your business, let's say 5 years from now?
Well, Randall, I wasn't gonna say this. No, seriously, that's a really good question. I am a new mom.
Yes.
And I value being a mom. So at this stage of my life, I never considered the thought of selling my business. However, with this new administration coming into office in 2025, there is a plan to purchase accounting firms. So, that never was an option well, I'm not going to say never was an option. I don't think it was a real thought. Until I became a mom, and then with this new administration, with that being kind of on the table. So in the next 5 years, if I am still working, I do plan on bringing in more CFOs. So maybe it's not just me as a CFO, but you have multiple CFOs. And then I would kind of just be more of like the salesperson, strictly just sales, just doing the discovery calls, doing the marketing, maybe some brand ambassador deals, just generating, finding other ways to generate revenue outside of just being in the day-to-day operations of the business.
How big do you think you would want that to grow? Are you thinking, okay, I want to have 5 accountants under me? Do I want to have 2 different different firms in different cities? Is that a thing for you?
No, I don't think we'll have, because we're 100% virtual right now. So I don't know if I would have a firm in different cities. I do think that we could grow to, right now, the bookkeepers can do about 10 clients each on a monthly basis. The accounting analysts can do about 15. So I think if I could grow to 50 clients, yeah, maybe like 50 clients, I think we will be good. And that would mean I would need 5 bookkeepers, maybe about 4 analysts, and then maybe just have like a COO who has an accounting degree, and then maybe bringing on one more CFO. I think that would be ideal.
Now, this is for, I guess, more of my business sake. How can financial planners help business owners better? You see the books, you sometimes see the tax mishaps. How can financial planners service those individuals?
So I think and this is the common misconception, right? Because people do come to me and think that they're like, I need to get a budget for my personal life. I need to invest. And I'm like, that is actually not what I do. But I would say some of my high earners, because they're paying themselves, right? And so they're paying themselves, 6, 7 figures. So that's when I think the financial planner could come in to say, hey, investments, trust, estates, if it's budgeting, because I don't do their personal budget, right? So I definitely think having a budget. I also think, I think financial planners can help everybody. not just business owners, but I think for my business owners on their personal side is where they would need the financial planner to say, hey, I need a budget. I need I need to invest, so forth and so on. So I definitely think that they work together. They're very different, but they can work together.
Agree, definitely agree. So what is your ideal client? So somebody's listening to this and say, I have to work with this lady. She is amazing. I love her glow. That's who I want to be associate my business with. Like, what is your ideal client that you want talking to you?
Yep. So my ideal client is somebody who wants comprehensive accounting services, right? My ideal client is somebody who wants to know enough, right? My ideal client is somebody who is eager to learn. My ideal client is someone who is very organized, because we are very organized. And so we are we're all up in the details. You're going to talk to us all the time. This is not a once a month thing, right? Like the bookkeepers and analysts, they're questioning everything. If they see something come through that doesn't look right, they are like, hey, what was this? Hey, we need a receipt. So my ideal clients, they're responsive, they are organized, and they have a desire to learn and understand what is going on in their financial statements. You said something earlier about not being an expert, and I'm paraphrasing, not being an expert in every area of business, right? So I don't expect my clients. I understand that accounting is one of those areas that is like foreign, and a lot of people stray away from it, right? So in knowing that, I just want my clients to have some eagerness to learn the basics, right? Because we're going to make sure that we're teaching you the basics. Our ideal clients also are more in the 6-7 figures range, just because, and it's gross. That's just because LUXE is a business write-off, right? But you have to be able to pay for our services to get the write-off, so that we can take your business to the next level. I always say anything over 8,000 a month gross is when you should probably start reaching out to get an accountant. Anything before that, you can kind of track in a spreadsheet. And then when you are making over that $8,000, take that spreadsheet to the accountant, and then they can, onboard you into accounting software, and go from there.
Like that. So if somebody's listening and say that's me, how should they reach out to you? What is the best mode to get in contact with Jadon Johnson?
So we have a website, www.luxefrankcharlie.com. If not, if you're happen to be just scrolling on Instagram or Facebook, we are LUXE Financial Consultancy on Instagram and Facebook. And in our bio, there is a link to schedule a discovery call. On the website, there's also a link to schedule a discovery call. So those are the 3 main platforms to get in contact with us. And yeah, we'd love to work with you.
Awesome. So first of all, thank you very much for joining us. I think you're very candid, you're very honest, and I think it's rare to get this much time with an accountant. So I think people who are watching are going to be excited to really learn from accountant's perspective what they can do to improve their business. So thank you for joining me.
Thank you so much. I appreciate it.
Take care. If you've been inspired to leverage your practice to create financial freedom, please schedule a consultation with Diesel Wealth Management. The legacy you dreamed of is a 15-minute phone call away from becoming a reality.
The more I know, the more money I can make.